Hello, hello, everybody. I am so excited for this call. You do not understand, like, I can't even like explain it. But first of all, I'm so happy that you guys are here, 5 o'clock on the dot. I don't want to waste anybody's time or my own time. So if you're able to, please turn your camera on because everything feels better and we connect more when we see each other's faces. It's kind of hard to talk to people when I just see names. So we're gonna make this real deep and personal. So first of all, I have a few of you guys' questions written down, but the way that I want to flow through this because there are some people who are new. Wait, let me make sure I'm recording. I would be so mad if I wasn't recording. So let me put this. Make sure to mute yourself, please. Okay, I'm recording. Okay, good. I'm recording. Okay, so the way that we're gonna flow through this because there are some people. Someone said they can't turn on my camera. If you can't turn on your camera, that's fine. But if you are able to turn on your camera, please do so. Please turn on your camera if possible. So like I said, the way that we're gonna do this is there's some people who are new, just brand new to trading, period. And then there's some people who have been trading, but probably have been inconsistent, may need some more clarity. So I'm gonna make sure that we hit both sides. We're gonna get really to the meat and potatoes of things. So I'm gonna teach you guys the 3 main important things when it comes to trading, which is where to get in, where to get out, and where the market is going. Because at the end of the day, don't we all want to make some money? Yes? Thumbs up, high fives, smiles, faces. Yes. Okay. Yes. Okay. Thank you, EJ, for the thumbs up, even though you can't show your face. Okay. So first things first, for the people who are new to trading, you might be thinking, okay, like, what is it exactly that we're doing? So for me personally, there's different ways of trading, but I decided to do Forex, which is currencies. So in simple terms, we're just buying low and selling high. So a good example I like to give is most of the stuff in the US is made from China. We all know that. No matter what people say, 95% of these people is getting their stuff from China. So what are they doing? They're buying it low, they're buying at a cheap price, and they're selling high in the US to make a profit. That's exactly what we're doing, but we're doing it online digitally. So we're trading like euro, it's the dollar. I don't think I can stop people from. How can I mute people? Make sure you're muted, please. Mute your mic because it's not allowing me to mute. Okay, so back to what I was saying. So we're buying low, we're selling high, and that's how we're making our profit, but we're just doing it online by pressing buy or sell. That's basically what Forex is. Like I said, we do it with the dollar, the Great British Pound, the euro, and anything else that you can think of. So that's just the basic. And also, I do want to point out too that Forex is one of the largest financial markets in the world. I love telling people this because literally throughout every day, there's $8 billion circulating. So there's literally no reason why we can't get a piece of it. And I like to tell people that you can easily make $300 a day because that's attainable for everybody. Yes, you'll see people making 1,000, 5,000, 10,000. Like the numbers are endless because the amount of money that you can make is pretty much endless, but I like to make it reasonable for the average person. And we're going to get into too, because a lot of people like to ask like, how much can I make in a week or how much do I need to get started? We're going to get into all that, but I do want to let you know that you are able to, what is this? Of course, I'm already recording. It says someone is what? I don't know what this is. It's popping up. Anyway, does that make sense to everybody? Most importantly, to those who are new, raise your hand if you're new. If you're able to, put your hand up. If you're new, newbies. If you can't put your camera on, just put a high five. So does that make sense on what Forex is? Yeah, buying low.
Yes.
Okay, perfect. What was the next thing I want to say? So that's basically what it is. So as we get into these charts, before we get into these charts, I do want to let you know, because I'm definitely heavy on mindset, personal development. As you get into trading, trading is going to show you what type of person that you are. It's going to bring out the inside of you. So if you are a very like timid person, confident person, you have high risk, low risk, it's all going to show in the market. And when it comes to your mind, this is very mentally challenging to a lot of people, because you're going to have a lot of people who don't understand what you're doing. They say trading can be a lonely journey because people can look at you. Even for me, like my family, even still to this day, like I can show my mom, oh, I just made $3,000 today. And then next week she'll be like, what are you going to do for a career? What? Some people aren't going to understand that, but you have to know that it's okay, because it's your journey. As long as you're clear on what you want, the vision that you have for your life. Like for me, everybody has different reasons. The reason why I got into currencies was because I saw that I was able to have my time back, because at the time I was selling pajamas. I was tired of having to convince people to buy from me. I was tired of having to market. I was tired of having to do all this stuff. I just wanted something where I had to do the minimum work, but to make the maximum money, which sounds crazy to most people, because most people are like, you have to work hard to earn all this money. But I remember one time my mom's friend told me, she gave me like, it was like a short speech. It wasn't even long. But the one thing that she told me was to work smarter and not harder. And I was 12 years old when she told me that. And ever since she told me that, it just stuck with me. So now when it comes to me making decisions, I have to see it from the perspective of, if this is going to take my time, is this going to stress me out physically? That's another thing she said, like physical labor. No, especially like as a woman, we should not be straining our bodies. Like it's going to break us down faster than it will for men. So I'm like, okay, I need to work smarter. I need to find something that doesn't take up all my time, and I need to get rich. So I came across an interview with my mentor, and she basically broke down Forex, which is what I'm about to do with y'all. And a lot of people, did it in the past with, I guess they call it MLM. So people that didn't really know how to trade, but they were basically getting paid for recruiting people. This is not what this is. I'm actually teaching you a skill to be able to trade on your own. And when she broke it down on YouTube, I was like, oh, okay, it makes sense. So I literally just invested $3,000 with her, and I just took the leap of faith, because I saw her, what she was doing, pressing a button from her computer, pressing the button from her phone. She's over here doing this, she's over here doing that. I'm like, how is it like 3 o'clock and she's already made this amount of money within 24 hours, within 2 hours? Like, I'm like, I was just mind blown. And so I'm like, if I can just learn this skill, I'm set for life, because it's never going anywhere. A lot of people talk about, oh, what if the dollar dies down? Guess what? You're able to trade gold. And also, if the dollar dies down, guess what? You're just going to be on your phone, trade the dollar. So either way, you're going to make a profit from both sides. Does that make sense to everybody? Look, some of the stuff, once I get to talking, I just get super, super excited. I can go on and on and on. But I know y'all came here to learn exactly how to get in the market, where to exit to make profit, and where the market's going. So for those who are new, I'm going to share the chart. The chart may look confusing, because I know when I first saw it, I was a beginner. A lot of people come and, they've already been trading. But when I came in about 3 years ago, I didn't know anything. So I was like, what the hell is this? But that's just anything that's new. But I'm going to make sure that I break it down as simple as possible to make sure that you guys understand. Everybody on the same page? Put a fire, put an emoji in the chat if you guys are with me, okay? I want to make sure everybody is with me. Fire, fire, fire. Yes, yes, yes. Okay. So what I'm going to do is I'm going to start out with a clean chart. If anybody has any questions too, I'm going to pause like probably like every 5 minutes. I'll be talking in like sections. And if you guys have questions, I'll take like a question or two. And then if you have more, just write them down. We'll get towards it near the end. But does anybody have any questions before I go on to the charts? Does anybody else have any questions before we get started based on what I just said? No questions? Everybody good? Okay. So let me pull up, I'm gonna pull up a blank chart, because if I pull up the chart that I be looking at, y'all gonna be looking at me crazy. Like, what is all of this? So let me pull up a blank one. Okay. This is blank right here. Okay, let me share my screen. Does everybody see my screen? I can only see like 4 people. I see 371257. Linda, Renice, pull a thumbs up if you guys can see my screen. Okay, perfect. Okay, so this is a chart. Everybody can make their candles. These are each of these are called candles. I just made them pink and black because pink is my favorite color. So the pink lines that you see on my chart, these represent sellers. So these are people who are selling in the market. You know how when it comes to the stock market, people buy or sell? Forex is basically the same thing, except with stocks, you hold it longer. With Forex, you can be in and out. So you don't have to wait years or months to make profit. You can make profit in a day. You can make profit in a week. And that's actually one of the questions somebody asked me was, can you make money your first week? Yes, you can. I'm definitely a big, how do you say? I can't think of the word, but basically I'm big on like, as you're learning it, I'm also going to be basically feeding you money, like giving you the trades that I take. If you're doing one-on-one with me, if we have a mentorship, I'm definitely hands-on. So showing exactly what you need to put in to get in and out, where to get in and out, and just to make sure that you don't blow your money. And then also what goes hand in hand with it. The second question I was asked was, how many hours a day do you have to trade? It definitely depends on you. Everything is a preference when it comes to trading, which is super amazing. Some people like to stare at their charts all day. I am not one of those people. What I do is there's a thing where I'll have a line like this, and then I'm able to set an alarm. So with this little alarm button, I click that and I just tell it to alert me on my phone. So this is called Trading View. It's also connected to my phone. So if the price touches this line, like how it did right here, I'll get alerted on my phone. So we're going to get into entries and all that stuff, but this is how I trade. I'm not looking for price all day long. Like I trade, I get in, and then I wait for it to play out. Whether it's 2 days, 6 hours, it doesn't matter. I just make sure I set my alert on my trend line. So when price gets there, I know what to do. I'm not constantly on my phone back and forth all day because that would drive me insane. I tried to do that when I first started trading, and I felt like a damn psychopath. But anyways, we're gonna get into now what I look for. So these pink trend lines right here, these pink little boxes that you see, those are sellers. The black ones are buyers. So like I said, the 3 most important things to know when you're in the market, I'm gonna type it out, is 1, where the market is going. So that just means knowing if we are in a buyer's market or are we in a seller's market. What's going on? 2, where to get in. This is important too, because when you get in the market, there's this thing called drawdown. So drawdown is basically saying if you get in and the market starts doing the opposite of what you anticipated. So it's basically like your account is taking a loss going in drawdown. But we do have this thing called a stop loss, which is you can stop the market. You can have the market pull you out at a certain area to literally stop you from losing more than you already lost. So it's really important to know where to get in, because if you don't know where to get in, you're going to lose a lot of money. Number 3, where to get out. So where to get out the market. A lot of people may be like, okay, if I get in here, I just don't know where to pull out. Well, that's why with the strategy that I use, it helps me with all 3 of these. So you're never confused on where to get in or where to get out, because you're very clear, okay, if price gets to this certain area, I'm pulling out and I'm taking profit. Does that make sense to everybody? The 3 most important things when it comes to trading. I'm gonna look in the chat too. That makes sense to everybody? Yes, we got Cedra on the call.
Yeah.
She's one of my students that we do one-on-one sessions with. So shout out to you for hopping on the call, girl. Someone said, can you restate when to draw out, please? Okay, so it's not called draw out, just pulling out. So like I said, the 3 most important things: where the market's going, where to get in, where to get out. There's a way that I use this one thing called a Fibonacci, and it's telling me once price gets to this area, I'm getting out the market. So say, for instance, if I was in this sale, so say I got in right here. I'm gonna just make it thick. If I got in there, I look for a few things to be able to get in high so that I'm able to sell it. So once it gets down here, the market will pull me out and I'll profit throughout this area. So I want to actually, before I take you guys step by step, I actually want to show you guys a good example of that. So I trade gold and I trade the Great British Pound versus the US dollar. Okay, I know it looks like a lot, y'all, especially for y'all who are new. Looks like a lot going on. Okay, but I want to pull this up for you guys. So right here, do you guys see how I have this pink trend line right here? You guys see this pink trend line? Thumbs up if you guys see it. Okay, great. I see one thumb. Okay, so what I just talked about right now, getting out of the market, I got in right here. I'm gonna highlight it. I got in right here, and then I took profit right here. So I sold it, I got in for a sale, and then I pulled out right here, because based on the confirmations that I have, I know when price gets to this area, it's gonna be a lot of people buying in that area. So online, I sold it to this area for another buyer, wherever else in the world, to grab this for a buy. Well, I sold it, so I made the profit. Does that make sense? Yeah. So you make profit by selling and also by buying. Some people get that confused too. I'm not sure what it is. Like I said, there's so many different ways to like trade. Like there's options, there's crypto, there's a whole bunch of other stuff. But I remember somebody had asked me, are we able to profit off both sides, or is it just one way? Like, I forgot what it was. I don't know. But someone said whatever they were doing, like they could only just buy, and once they're in, like that's it. That's not how it is with currencies. You can profit by both selling and buying. You just have to know what direction you're in. Does that make sense? So also I want to point out too, me getting in right here, say I got in for a sale and I took it down to this green zone, right? You guys see this number where it says 699? So that's just saying it's 699 pips. That's basically just saying how far price went. So 699, I want to show you guys how much that I made off, and it shows you it took 7 hours. Do you guys see right there where it says 7 hours, 15 minutes? This sale got to this area in 7 hours. So using this calculator, I'm gonna pull up this calculator. You guys still see my screen, right? So I use this Forex pip calculator. So I'm gonna show you guys. The chart I'm showing you, this is gold. So you put in gold right here. I said it was 699. And then this thing called lot size. So when you're entering a trade, you're gonna put in what is called lot size. It's kind of basically saying how much you want to like bet on it. So I'm gonna just show you guys some examples. So I'm gonna just put in random numbers to show you guys how it changes. But the numbers right now, even if you're new, like you might be like, why am I putting 0.15? That doesn't matter. But I just want to show you guys like how much it changes. So it goes 699. So that's the pips it was. So depending on how much you put up, this is how much you will make. So if you put in 0.15, and this is in 7 hours, you would make $100. If you have put in 0.50, you would make $350. If you would have put in 0.80, $559. 1.50, you would have made $1,000. You guys see, depending on what you put in, the amount that you make will change.
Yes.
So that's why I tell everybody like the amount that you can make is endless, because it literally depends on like what you're putting in. And this is in 7 hours. So even if you put in $700 in 7 hours, like, please tell me where they're doing that at. Off just pressing a button. Looking at a chart. But you have to realize too, whatever you put in, you have to know how much you're willing to lose. So when you put this in here, you have to know, okay, say I got in right here. You guys see how it pushed down? Wait, let me, you guys see how it pushed down right here? It pushed down and then it pushed back up before it went down to that area. You guys see that? How it pushed back past it? You guys see that? Talk to me. Thumbs up. I can barely see some of y'all.
Yeah, we see that.
Okay, so with price pulling back this way, you can see where I entered right here. This blue box is where I entered. You can see when it pushed up, it pushed past when I entered. So that means I was in a little bit of drawdown. So that means my account was a little bit in the negatives before it went towards to get in profit. But I was okay with that because we're going to get more into detail. But the area that we were in, this whole yellow box, basically was telling me that price was going to do a little bit of that before it continued. So I was already anticipating that. So that wasn't a big deal for me. But let's just say if price pushed past this area right here. So instead of it stopping here and pushing down, let's just say it came up here. That means that was 622 pips. This is where you would put your stop loss. So a stop loss is basically saying if it's going in the opposite direction of what you anticipated in, you want the market to pull you out to stop you from losing more than you want. Does that make sense? So yes, okay, if we got down to this area, let's 793. I put in 699, but let's just go keep 699. So yes, you would have made $699, but you have to be aware of how much you can potentially lose. So if your stop loss is right here, you could potentially be losing $521. So I always tell people first, remember, yes, your stop loss, you can make a lot of money. Don't matter, the higher the stop loss, the more money you make. Yes, I understand that, but you want to calculate how much you're willing to risk first. So say, wait, muted. Somebody is not muted. Okay. I just muted them. So you want to make sure to look at what you're risking first. So if I know my stop loss is at 521 pips and I don't want to lose $521, guess what I'm going to do? I'm going to lower this. Okay, I'm fine with losing $260. That's fine. Now I'm okay with that. And I can go to sleep in peace. Because you don't want to go to sleep thinking, oh, damn, I might be losing $900. That's the worst thing you want to do, because once you start seeing that red, you're going to automatically pull out. And guess what? You were right. So you would have been real mad seeing that it went your way, but you pulled out too soon because you were scared, because you were risking too much money. So you have to look at how much you're risking first. So now, okay, great. Now that I know that that's my stop loss and I'm willing to risk $260, now I know once I go into profit, right here to the green zone, you guys see it went all the way to 782. Okay, I'm going to make $391 in 7 hours. That makes sense to everybody? Risk over profit.
Yes.
Okay, now that we got that out the way, because I know with the trading community, that is like the biggest reason why 95% of traders fail. So even though right now it may seem like, okay, why are we going over that right now? That's not that important. It's actually the most important part. The strategy is the easiest part. So now that we got that out the way and everybody's on the same page, everybody put a yes in the chat, thumbs up. Let me know if that makes sense before we really get into the meat and the potatoes, the good juicy stuff. We about to eat it up. Okay, perfect. Yes. Okay, let me go back to a clean chart because I got a lot going on this one. Okay, was this the same one? Yeah, this was it. Okay, so like I said, 3 most important things: where the market is going, where to get in, and where to get out. So I'm gonna zoom out some. Okay, so when it comes to where the market is going, there's this thing that we call structure. So basically, we're looking to see if the market's in an uptrend or a downtrend. If we're in a downtrend, we're going to be seeing the market doing this. If we're in an uptrend, we're going to see the market doing this. So when we're in a downtrend, that means we're going to be taking majority sales. If we're in an uptrend, that means we're going to be taking majority buys. Now let me show you how that looks on the chart. So looking at this chart right here, I'm going to show you both sides. So right here, it's a downtrend. You guys see how it's just going straight down? Right here, it's an uptrend. So all of this is going up. So now let me break this down to you guys. When it comes to selling, we're going to start on this side first, this right side. So this is structure. So this is the most important thing when it comes to trading. This is something that you're not going to learn off the bat. It takes practice, repetition with your eyes. But that's why it's always good to have an extra set of eyes looking over you to make sure that you're getting it. Because if you don't know how to do structure, if you don't know what structure is, you don't know what direction the market's going in, you're 10 times out of 10, you are going to just lose everything. So when it comes to market structure, I always tell people, whatever time frame you're on. So this is right here, and these are time frames. So basically, where it says 4 hour, daily, 1 hour, that just means that's how long each candle took to make. So you remember how I said my pink candles are sellers? Right now, being on the 4 hour time frame, that means each of these candles took 4 hours to make. So during this candle was being made, that just means it was a lot of sellers within that 4 hours. That makes sense? If I go to 1 hour, it's the same thing. It took 1 hour to make this. That was buyers. So now when it comes to, I'm gonna just start with this time frame because it's more clear. When it comes to structure, I say whatever time frame you're on, you always want to look at what areas stick out the most. So you look at what high is sticking out the most, what low is sticking out the most. So me, like, I just know structure like already off the bat, so I can point out to you like what is the highs and the lows. So this is a high, this is a low, this is a high, this is a low. You guys see that? High, low, high, low. I kind of like the bouncy ball effect. When you bounce a ball like really hard on the floor, it's gonna go up and hit the ceiling. It's gonna go back and forth. That's exactly what structure is. That's exactly what it does. It goes down to come right back up, to go down, go back up, back and forth. That makes sense to everybody. Yes, thumbs up, smile. Okay, great. So now that I found my high, my low, my second high, this is my structure right here. So I'm gonna draw it out. So I go from this high to this low to this second high. This is called a pullback. So anytime market is going one way, it always pulls back. So it slows down a little bit, take a breather. It's like when you're running around a track. It's like you may be going super, super fast, but you may slow down in one area before you start picking it right back up. It's the same thing in the market. It's always going one way before it takes a break. That's why I said we just talked about drawdown. It happens. It's going to pull back before it continues. And I know for people who are new, this is different language, but that's why I'm trying to explain in sections like what each thing means. So you have this pullback all the way to the final destination. When you're looking at structure, you're trying to figure out how to get to this final point, this area right here. You're trying to figure out, okay, where do I need to get in the market to be able to take it down right here to make profit? Because this is all profit right here. So when it comes to getting in the market, what you're doing is whatever time frame you're on, we're looking at the 4-hour time frame. So the higher the time frame you're on, the longer it takes to play out. So you can see on this one right here, this will be the area that we'll be looking to get into to be able to ride down to the bottom. Right, someone have a question? Pullback gives you another opportunity to put in another entry. Yes, every pullback is an opportunity to enter the market. So the higher the time frame you're on, the longer it takes. But I'm just on this higher time frame just to show y'all because it's more clear. But you can see this 4-hour one took about 12 days to play out, but we ain't sitting in the market for 12 days. But the concept is the same for every time frame, okay? That makes sense? So you want to figure out where you're getting in right here to exit out right here. So find your structure. Then the next thing you want to know is where you're going to enter the market. So whatever time frame you're on, so if you're on the 4-hour, I always go on the 1 hour underneath it. I don't trade the 2-hour or the 3-hour. I do the 4-hour, 1 hour, mainly the 1 hour, and then I enter on the 30-minute or 15-minute. So if we go to the 1 hour, the 1 hour is right here. So this is another thing. When it comes to structure, there's always another opportunity right inside of it. So how I just showed y'all that one would take 14 days to play out. This is another move before that one happened to take advantage of. You can see this one took 4 days to play out. And that first one that I just showed y'all, that took 7 hours to play out because I was on the smaller time frame, a 15-minute time frame. So it really varies. It just depends on what you're looking at. So when a lot of people ask me like, how long is this going to take? How long do I have to be in it? Like it varies, but it's all possibilities. If you want to hold it longer to play it safer, it's going to take you a little bit longer. If you want to be in and out, you can do that. You can get in a couple hours. You can get in a couple minutes. Does that make sense? At the end of the day, you just have to have the strategy to know to execute. The way that you want to make the money, it's on you and your personality. For me, I can honestly say, like I said, how I came on this call saying I cannot look at my screen 24/7 all day long. That's called a scalper. Some people are able to do that. Some people believe that's how you make more money. I believe that's how you lose more money. Everybody has their preference. I'm definitely the person that I can hold a trade for a day or two. Most of my trades will either play out within like 7 to 12 hours, or it may take a day or two. That's the type of trader that I am. So back to what we were saying. That makes sense though. The clarity on how long things take. Yes, I want to make sure everybody's following. I don't want to be talking to the air. Okay, great. So now moving on, that's where the market's going. So once you have your structure, you know, okay, I just see that this is a structure going in the downtrend. One thing I like to do too is I'll put a trend line. So before I go into the entry, I want to talk about that too. So when it comes to my trend lines, all I do is I take this trend line right here and I find 2 points. You remember how we just went over how I found the highs and I found the lows that peak out the most? So I draw a trend line just finding 2 points. So just like how I just pointed out those 2 top ones right here, now all I'm going to do, let me move this so I can see this. I'm going to draw 2 trend lines across the top from it. Like this. So now looking at this, since we identified our highs, now I know price staying under this trend line, anything below this trend line means we are still in sales. So I'm still going to be selling in the market as long as price stays under this trend line. Does that make sense? So all of these means I'm going to be taking majority sales. Yes, there are some buys opportunities that you can take. Like right here, you can see this is a little uptrend. The one that I just drew out, that's a little uptrend to take advantage of. Right? Like I get that, but I'm saying majority of them would be sales. Does that make sense? As long as we're staying under this blue trend line. So that helps me indicate where the overall, like bigger picture of the market is going. Number one, where the market is going. Does that make sense to everybody?
Yes, it does.
Now, as long as price stays under this trend line, we're taking sales. Now I know we're going to be going into a buyer's market when we get a break and a retest. And I'm about to explain that. Now, this is something that I use to get in the market. So you can see all of this, price is staying under it until it didn't. So look at this one right here. Remember I said point out the highs and the lows. I'm gonna make it a different color. A high, a low, low, highs, low, low. You guys see that? Now, once I identify that, now I see we're going in that uptrend. You guys see that? Finding those lows, those highs. Now, before any of this even happened, if I'm looking to get in, and this will happen for both sides, for either buying or selling, it doesn't matter. This happens on every side. I'm looking for a break and a retest. So you remember how I said how this trend line, anything under it is being sold? So until price gets above that trend line, I'm taking sales until it breaks through it. So you can see right here, price started breaking through it. But guess what? Let me show you guys. Let me go back a little bit further. Okay, perfect. So you guys can see, I have my 2 points. I'm very detail oriented, so I really want to point this out. I have my 2 points. I'm gonna highlight it. 1, 2. Draw into the future. You find your 2 points, draw into the future. Now you can see price came back to this trend line right here, but you see it pushed back down. It never pushed past it. Right here, you can see it started doing the same thing that it was doing in this area right here, pushing past it. I'm not gonna just jump in for that. I need to see it retest first. So I need to see it come back. Oops, that's the wrong one. I need to see it come back here to the trend line to retest it and push up. So this is my break and my retest. My break, pull back to here to continue. Because you can see right here, we pushed here, pushed right back down. We broke through it, pushed back down. Came back to it, pushed back down. So right here, I don't want to end up in that same situation. So if we start playing it back, you can see price came right back here, retested it, and then continued up. So this was my retest to enter for a buy. Does that make sense? No? I see someone head shake no. Okay, so let me break it down a little bit more. So, like I said, this trend line right here, this blue trend line, I have my 2 points that I drew into the future. So all this price that's underneath it, I know that I'm taking majority sales until this blue trend line is broken. And by broken, this is what I mean, that it breaks right through this trend line. It broke, you see how it broke through it? You see that? And then it pushed away, and then it came back here to the trend line, and then it started pushing up. So this right here, yes. So now the trend is a buy. Yes, Allie. So this right here, this is, you see how it's super skinny right there, that line right there? Okay, so that's showing you that buyers are entering the market. So right here, for example, you see this black candle right here after this pink candle form. You see how this pink candle right here formed this little skinny, let me make it yellow so you can see it. You see how it formed this skinny arrow right there, that skinny line at the top? What's your name? Kelly? You see that? You see that skinny line? So once it came back to that trend line, it showed all the skinny line at top is showing that sellers are entering. When it comes from the bottom on the trend line, that shows buyers are entering. So it's basically showing, it's telling you that it's a lot of pressure. In this instance right here, it's a lot of pressure pushing price up. In this instance, since they were at the top, it's showing pressure being pushed down for sales. Does that make sense? So that's just what we call a break and a retest. That's just the term for it. That it just broke through that trend line and came back to retest it for, in this instance, for a buy. That makes sense? It's just the terminology. So even if someone said, Okay, I'm gonna go over my stop loss in a minute. So even like this example where I first showed you the trade that I got in for gold. This right here. Well, I showed y'all it was this one, but I got him right here too. This was like so clear as day. This was just like a beautiful, like, I just love when the market just do what it's supposed to do. Anyways, so right here, this blue trend line, same thing. So looking at this, I'm gonna just show y'all. Don't be like, oh my God, like I'm about to break down, because this is just a chart that I trade on, so it can seem like it's a lot going on. But I just want to show you guys in real time like how it looks. So despite all this noise, you guys see this blue trend line, right? Everybody see this blue trend line?
Yeah.
Okay. So do you guys see these yellow boxes?
Mm-hmm.
So this blue trend line was telling me before any of this had happened, we were looking for buys. These were all buys because it was staying on top of that trend line. Now, eventually, what I just showed you guys, price, I'm gonna go to the smaller time frame because we always go to the time frame underneath it. You can see, remember the blue trend line had all those yellow boxes because price was staying above that. Remember, when you have that trend line, it shows you what direction price is staying in. So eventually, price broke through it. You guys see how I have the red box just means that's the breakage happening. So it's pushing down past that blue trend line. You guys see how it just pushed through there? Remember, it was holding a price. Then it broke through it. Now, once I saw that breakage, I was looking for a retest to continue for sales. So you can see price came back right here at this blue box. Blue, I'm getting blue. I can't even talk. Blue box was that retest. So price broke through here. So it went from buying to now selling because it broke through that blue trend line that was holding price up. It came back to retest it. Right here, you see that super straight tiny line that formed? So that's when I say how I set my alert on my trend line. Like, that's why I'm not looking at my chart all day. I literally, you can see it's already like blue. I already had my alert set to alert me when price came back to this blue trend line, because I want to see it form just like this, because now that's showing me that there's hella pressure of sales happening. So now I'm getting in here to sell because I know somewhere in the market right here, somebody is coming to buy it. So this is where I'm profiting. And you can see this played out in 12 hours for 265 pips. With gold has an extra number at the end. But it's 265. So this took 12 hours for 265 pips. We're going to put this 2652. That was $1,300. I actually made like 25 because I entered twice. But that was $2,500 that I made in 12 hours just from knowing to get in on that retest and being patient. And I knew to take it out right here because on this higher time frame, you guys see this long blue box I have going across? So I have this blue rectangle going across because this was an area where I saw price kept stopping at. So after we broke through right here, price stopped right here. It stopped right here multiple times. It stopped right here multiple times. So once I see it do that like 2-3 times, I already know like that's an area that price could potentially be stopping in again. So that's why I had got in right there and then I pulled out right there. And that's how I made the profit. And there's a few things, like you can't just get in off like one confirmation. You can't just get in off just seeing that blue box. I don't know why I can't say blue box. I'm about to hear you say blue box clan. Okay, anyways, you can't just get in just off like seeing one thing. Like you have to see multiple things. So like for me getting in on this break and retest, like yes, my break and retest is always like my final entry, but there are some points in the market where I don't need a break and retest because I have other confirmations letting me know. I just want to give you like a example. So right here, I use a Fibonacci. Fibonacci tells me where to get out the market, how long it's going to take. Yeah, how long it's going to take and where to get out. So right here, I just want to show you guys an example of when I don't use a break and retest. This is the structure. I'm going to draw it out for you guys. Remember the structure where we just went over the highs and lows is where the market's going. So right here, my Fibonacci, basically it's telling me where to pull out of the market. So each of these numbers that I have on my fib tells me how long it's going to take to get there and also what price is going to do. So for example, when price comes to how it did right here, 61.8, that tells me it's going to take a while for price to get to my overall take profit. It's going to take a slower amount of time. So that's kind of telling me like, you know, be patient, but it's going to happen. Another example is if it just hit 23.6, that means that there's going to be consolidation, which means the market is just going to be doing this sideways movements before it goes into your overall direction. But like I was saying, looking left right here, this is where I didn't get in on a break and retest because it hit my take profit 2, which is right here, 61.8. We also hit this zone right here. So looking for key levels where price is stopping at, we got to this zone area right here, which I saw was broken, because everything that's broken always has to get retested. Just like when I say when the trend lines get broken, it always has to get retested. When the zone breaks, it always has to get retested. So this zone right here was broken, but it never got retested, but it was aligned with my 61.8. So once price got here, I'm like, okay, we have 61.8 hit. 61.8 on the higher time frames means that we're about to reverse. So now we're about to go from buyers to sellers. So that's what my 61.8 tells me. We're retesting the zone, and we also have divergence. Divergence is basically two things doing the opposite. So you can see this arrow that I have right here. It shows price was going up, but then when you look right here, price is going down. You guys see how those are two things doing the opposite?
Yeah.
So this is going down. You see how this is going down. Low, 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 low. Meanwhile, this is creating high, 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 high. So this is going up while this is going down. So that's two things doing the opposite. So we hit my 61.8. We have divergence, and we were retesting this zone. Was this trend line? No, that trend line was new. So those were 3 confirmations for me to get in for a sell without a break and retest. That's not something like I tell people to do in the beginning. You have to like learn the basic concept first before looking for this setup because this is a little bit more advanced setup. But I just wanted to show you guys that's an example of when I don't use a break and retest. In that circumstance, that's the only like thing I look for. Like I need 61.8, I need a retest, I need like 3-4 other things telling me what to do if I don't have a break and retest. But besides from that, that's the main thing I look for. So now but that break and retest always occurs on a trend line, on a zone. And as long as you know your market structure, which is telling you where the market is going, which is what we just went over on this other chart. Where is it? Oh, shoot. Here it is. So yeah, so where the market is going is based off the structure. Where to get in is based off that break in that retest, because you always want to enter on that retest. When it comes to your stop loss, someone did ask me that on, damn it, I forgot what pair we was on, what area we was on. When it comes to your stop loss, I always say I don't like giving an exact number because everybody's risk tolerance is different, but I always say, like, if you can, like, maybe like closest go like halfway towards that previous low. So what I mean by that is if you enter right here, your stop loss will be right here because you need to give it room. Someone said it was GU. Was it? Oh yeah, it was this one, right? This one on GU.
Yeah, it was. Yeah, it was.
Yeah. So it would be right here at this one because this is the overall move. Right here. So you're going to that previous low because you can see this one is leveled out with this. So you want to take it, like I said, either because GU, since it's not like, you know, GU and gold pip, like you get more money out of gold than you will with GU. So with GU, like the more wiggle room you give, it's like the better, because if you're correct on GU, like 9 times out of 10, you're not going to go in that much drawdown. So when it comes to like taking it to that previous low or that previous high, it's like, it's perfectly fine. Like you're not going to be risking nothing crazy. But if you do want to, if you're not comfortable with taking it to that previous low or previous high, then I would definitely say take it like halfway. Or if you want, what you can do is sometimes what I would do is, like, say you put your stop loss here at that previous low. What I'll do is halfway, I'll put like a red trend line and I'll put an alert once per minute, because say like if this didn't push up and it starts coming down, like I want to be alerted, like what's going on in the market. That makes sense?
Totally.
Okay, perfect. So yes, it's 5:59. So that's exactly what it is. Like where to get in, where to get out, where the market is going. The most important thing is just having that strategy that you stick to. A lot of people too, like people go on YouTube and a lot of people get confused because there's so many people teaching you how to trade, but everybody has all these different strategies. But at the end of the day, I always say every strategy works. Like that's like a no-brainer. Every strategy works, but it's about you sticking to one strategy. Because if you try to use a strategy from this person and a strategy from that person, it's not going to mesh together. You have to pick one, stick to it, and master it. Let me see what somebody said in the chat. Do you break even on your trades? No, I don't break even. It's very rare if I do. It's for most part, it's either I take a loss or I take a win. If anything, like I would say, like if I'm not taking it all the way to my take profit, what I'll do is I'll take it to the next zone. And I want to give an example of that. I feel like it's been happening recently. When did I do that? Was it with GU? I think it was, yeah, it was right here. So at this yellow one. So right here. So basically, I'm not gonna like go too much into it. I wanted to see if I really wanted to see if price was gonna come down to here, but the way price was moving, it didn't seem like it was gonna come there. And then we were also at this zone where price was stopping a lot. So when it came back to this yellow zone right here, so this yellow zone that was broken, it came back to retest it. right there. Instead of me trying to like force it and like say, okay, well, this is my structure here, I'm gonna take it down here. No, I didn't. I just took it back to this zone. So that's like an instant where I wouldn't like take it all the way to say like my quote unquote TP1 on my fib. I would just take it to that next zone just to be safe, because I just kind of had a feeling that it just wasn't gonna go past that area. So that would be the only scenario where I don't not necessarily like, because it's not breaking even, but it's not taking it to my full take profit. That would be the only scenario. Other than that, it's like I either place my stop loss and I lose, or I'm taking it to my take profit if I'm confident. If not, like I said, I'm always just aware of how much I'm risking and how much that I could be losing. That makes sense to everybody? Okay, perfect. So I know like we had a great like 1 hour. I do want to open it up for a quick like 2 to 3 minute Q&A before we end the call. And also for those who are excited to learn more and get really hands-on, I do have one-on-one mentorship, and I do only accept a certain amount of people. I am accepting 5 people for the next 24 hours. Usually, I do charge more than what I'm charging right now. I usually charge $24.97 for 6 weeks. But since you guys hopped on the call, I'm only charging $14.97. But anybody who's not on this call, and I'm gonna change the link in my bio because I know people be trying to be sneaky, but I took that off. So if you're not on this call, you won't have access to it. But for the next 6 weeks, I'm only doing it for $14.97. It's one-on-one mentorship with me. We're gonna be really hands-on, and then I'm also gonna create a group chat. This is something new. So I'm going to create a group chat. So you're going to have my number. So we're going to go through like I said I don't trade day to day, but when I am in a trade, like I'll give updates. You'll also have access to me, to my course, which is self-paced, and we're going to meet one-on-one weekly. And then also there's Afterpay and Klarna.